With the Federal Reserve, do you anticipate that they're going to continue to cut rates? And if you notice these last several votes over the last year or so, generally the board votes unanimously and together, and that has not happened. I mean, even the most recent one was a 9-3 vote, and one of the governors voted against it because he wanted a 50 basis point cut. Right. I guess my question mainly is, and this is, of course, for our the benefit of our audience, is for them to understand or what to expect. From your point of view, should we expect another cut early in the new year, and how does that help the markets itself? Will more money move into the equity markets as opposed to the fixed income area or bond markets?
If I had to guess, which I guess I'm having to do right now, I think it is likely we will see at least one more interest rate cut early in the next year. A lot of that is predicated on what we're seeing in the employment numbers. Employment is weakening, and I think as a result, it gives the Fed, sort of room and the rationale to make an interest rate cut. But one of the things that's been interesting is, although short rates have been, coming down a little bit, the longer rates, especially the 10-year, actually have risen on each one of these interest rate cuts. So it's interesting because the short rates will affect how much, for example, you're earning in your either your certificates of deposit or your short-term treasuries. But for example, from a mortgage standpoint, mortgages are more based upon what the 10-year is doing. So we haven't really seen mortgage rates come down, whereas the rate we're getting on our cash has diminished. But then there are other things, for example, credit card debt and other debt, which is pegged to shorter term borrowing, has come down. So different facets are affected differently by the interest rate curve.